In this video, I'm going to show you exactly how I rolled out of a Bristol Myers trade where my shares were probably going to be taken. I ended up rolling out and higher on the strike price. I'm going to show you how that works in this video, and I'm going to give you a look at how my March 2022 results ended up. Stick around. I know you're going to like this one. Let me show you my eyes. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about that rolled option where I was going to have my shares taken away. I was able to avoid that. I had to make a decision and I decided to keep the shares, roll my option higher. And I'll tell you what, my shares would have been taken away, not because of expiration, but because of a company event. Now, with that said, let's go ahead and talk about how we keep our shares from being taken away from us. We want to avoid expiration. I know a lot of you out there want to keep your shares. You want to write covered calls on your shares, but you don't want to give them up. And I understand that. So let's talk about the roll today. This is a real trade that happened just last Thursday. Now, I've owned this stock for a long time, and my cost basis is in the 50s. So understand that if I lose this stock, I'm going to have hella capital gains. So I want to avoid that by rolling out of my current option and rolling into another option. I'm going to show you exactly how that works. Now, hey, look, if you like anything you hear today and you want to learn how to make retirement income to pay the bills, live the good life, use the stock market like I am, well, look, you need to subscribe to the channel. I come back every week, show you timely and relevant trades to up your game. And look, if you like the video, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. I'm going to show you my March 2022 results. It was a very good month. Traditionally, March is always a great month. I'm not really sure why. I absolutely believe it's because of the volatility in March, where the stock market has come out of the new year and sells off, and then it's rallying again. And minus the geopolitical events around the world, stock market's doing exactly what it typically does this time of year. And there's a lot of value to be had out there. So if you're in the game, this is the time where you really want to make sure you're finding those great value plays, making some great trades, letting the markets drift higher. Tell you what, we are out of the correction mode. Doesn't mean we're in rally mode, but we are definitely out of the correction mode if you ask me. A lot of value out there. Found one this week with Morgan Stanley. I'm actually going to play that Morgan Stanley as a cash secure put and a poor man's covered call. The members already got those trades. Now, speaking of trades, we have in the first quarter of 2022, we've made $23,000 money on the table and have some positions that are challenged. But because we have time, I'm not going to worry about them right now. Right now, these spinning plates just need to stay on the sticks, right? And that's what we're doing. I probably have some 10, 11, 12, 13 positions that I'm moving in and out of. I'm using the poor man's covered call. I'm using cash secure puts. And of course, I'm using covered calls. Right now, I have a lot of variety and I have a lot of stocks and ETFs that can get in the game. Unlike last year, if you remember, I really sat on my hands as a lot of my favorite stocks would fall, and I was afraid to write covered calls and have my shares taken away. Well, this year we're rolling our covered calls every chance we get if our strikes are challenged, and that's what I'm going to show you today. With that said, over $400,000 I've made selling premium since this YouTube channel started. I have been keeping that tracker for the past 5 to 6 years. And what that tells me is this. In retirement, or if you need a little extra income, selling premium gives you that opportunity. You know, you learn this skill, you get experience, and what happens is it starts to flow like water. Just like anything, when you learn it, you get more comfortable with it, you can use it. And in this case, you could actually use it to generate extra income in your life. Speaking of income, March turned out to be a great month. $12,965. Actually rolled a stock, so I took a loss in the month of March. We're rolling that forward into April. Right now, I'm up cash on cash 10.29%. This shouldn't surprise anyone that knows the selling premium strategy. You know, the S&P 500 is down almost 5%. Well, we've just had a correction, right? But when we sell premium, we can have those consistent gains, put money on the table. We could have consistent cash flow and use that money to pay the bills. I mean, really, it's one of those blessings in the stock market that nobody talks about, selling premium. You know, wealth managers won't talk about it because once you learn it, you are going to become self-sufficient. You'll do it yourself. And next thing you know, you're knocking it down. You don't need them anymore. With that said, already on pace to get to that six-figure number. Now, I don't know if I will. I really needed this to be 25,000, but hey, I'll take it, and we'll look to keep doing what we're doing, because if that is the average of every single 3 months, I know I'm going to like that. Now, if any of this interests you, I have that free 1-month membership over there at my website, cptdashboard.com. Click Upgraded Dashboard. Become a part of my membership. I'll tell you what, at the end of the day, I'm getting so many emails right now. People want to know about different trades. They email me. I write back to them. I give it to you straight talk style, seeing the world through John's eyes. Now, this is a trade that I always talk about to the member. It's a buy and hold stock. I hold this stock to collect dividends, right? It's going to go up and down, but for the most part, I want that dividend. And Bristol Myers is a stock that I use this for. But what I like to do on the company's non-event months, I love to sell premium. I'll sell the 30-day, deep out of the money, typically the 30 delta, maybe even the 25 delta. I don't want my strike price challenged. I want to collect what equals about a company's quarterly dividend in this trade. And that's what I did here last month. Now, this is the rolled trade we're going to talk about, but let's go over to the original trade just so you get a flavor for what I'm thinking at that moment. Now, back on March 21st, Bristol Myers is moving higher. Now, one of the things I love to do when I'm going to write a covered call on a stock that I own, I call it my doubling my dividends trade, right? I have no expectation of my shares being taken away. I love when the stock is trading at the high point of its cycle. The likelihood of it peeling back is very likely. And in the case of Bristol Myers, it's a mature pharmaceutical company. So with it having an RSI of like 72, 73, this thing is baking right now. It's overbought by most every measure. And because it's a mature pharmaceutical, really, this thing shouldn't be trading this high. Now, there's reasons why it's trading higher, and I've benefited from that. It's gone from 49. We could have got this thing at 49, and it's now rallied to over $73 a share. Look at that parabolic move in a pharmaceutical S&P type company. That's unbelievable. Now, with that said, stock is getting higher. Absolutely love to come in and write a covered call at the top. Because what I'm thinking is this, it's going to peel off, and when it peels off, I'll be able to write that covered call right there. Stock will move lower. I'll be able to keep that premium, which typically equals about a company's quarterly dividend, and the stock will peel off. I get to keep that premium. We move on. This is a little game I play to keep myself in the game. I have about 3 or 4 stocks that I like to do this with. Bristol Myers is one of them. Well, back on March 22nd, I felt that Bristol Myers was a little toppy, and you could see right there. It's very toppy, and the RSI is cooking. So I write the covered call. In fact, when it was trading at 71.25, you can see right here, I go ahead and I write the 73 out of the money, right? And what I'm trying to do is collect the company's dividend, and there it is, 60 cents. So that's my goal here. Nothing more, nothing less. And I don't want my shares taken away. So with that said, what happens in just 2 weeks? Well, Bristol Myers is moving higher, and there's an X date coming that I totally missed. Let me show you the chart on Bristol Myers right now, and then we'll talk about my rolled trade. So here's the deal. The day before the X date, I have to make a decision. Bristol Myers has now popped way over 73. And here's the hook. If Bristol Myers is above 73 and the stock is trading above the covered call premium they paid me, remember it was 60 cents? It makes sense for this call buyer to take control of my shares, collect the dividend. They'll probably sell the shares immediately. They would be taking my shares early, and this is the reason I had to take action. The reason I had to take action is because the call buyer has now become profitable in the trade. And this is exactly what they wanted, right? They wanted the stock to go to 73. They paid 60 cents for that, right? And now the stock's trading over that expense to them. Now they're going to collect the sum 55 cents. So for them, this is a green trade all around. They've actually covered the 60 cents in premium. And that's the key. That's the cost of this trade to them. So on the day before the X date, and I think you know what the X date is, right? The stock will distribute the dividend, the 55 cents, the night before the X day. The X day is when the stock trades X dividend minus dividend. So I have to make a decision that night. If I don't, the market maker will come in and take my shares and give me the $73. Now, for most situations, that's exactly what I want to happen. But because this is a buy and hold stock, and I have so much capital gains in this, I don't want this to happen. I want to buy this option back. I have to. If I don't, they're going to take my shares. I'm going to be slapped with serious capital gains. And of course, Bristol Myers goes away, and I don't have this stock in my portfolio anymore. Let's go over and look at the trade that I did and see if it makes sense. What I'm doing here with Bristol Myers is called portfolio overwriting. You will hear people talk about this on YouTube all the time, where you take a buy and hold stock and what you look to do on company non-event months is write deep out of the money covered calls. Now, you'll hear some people talk about writing tighter to the money calls. I don't like that. What I like to do is let my stocks get to the high point of their trading cycle. It's more likely and favorable that once I write the covered call, remember it's a deep out of the money strike, so it would have to continue up to that strike to be challenged. Well, usually it peels back. My 60-cent dividend in the case of Bristol Myers would go to zero. I keep it and I still have my buy and hold stock. So I wrote this to the members about overwriting your portfolio of buy and hold stocks. Now, I call this doubling my dividends largely because I want it to be a game for me, right? Because I could have my buy and hold stocks sit there for years and years and years and years. I love picking up the little crumbs, right? This is nothing when it comes to the money being made, but I love being active, love having my mind working and watching these trades. And here we are. Bristol Myers put me in a spot where I have to make some magic happen if I don't want these shares taken away. But this is what I'll send to the members. In this case, I talked about Merck. Merck is another stock I own. It is now hitting resistance, and its RSI is smoking hot right now. Merck trades in a great range. When we started talking about Merck at the membership, it was trading around 73, 74. Now, this isn't a stock that I believe breaks out into the 90s and the hundreds, but it trades in such a range that you can trade that range. And that's what we want to do. Now, I own stock, so if I write a cover call right here, the expectation is it'll peel off. Now, if it doesn't, I have to know how to roll trades. I have to know how to buy back an option and then roll it to the next strike, rolling out of the position. Let's go ahead and look at that new Bristol Myers trade and see if I did it the way you're thinking I did it right now. Now, again, the setup is simple. Bristol Myers is trading at 71x. I wrote the out of the money 73. I know that doesn't sound like much, but for a stock like Bristol Myers that kind of treads water sideways to higher, a $2 out of the money strike, like a 25 delta, meaning when I write that covered call for the 73 strike, there's a 25% chance it might get there. Now, the reason I want to use that 25 delta strike is because as the stock moves higher, I'm betting it's not going to jump off the chart. So as it goes higher, I might be able to buy the option back cheaper. I'm able to roll this covered call to the next month. Well, in the case of Bristol Myers, it popped above my strike price. At the chart, you saw it's trading for 73.84. Well, clearly they're going to take my shares. It's the night before the X date. I have to make a decision. So the decision I made was this. We're going to go ahead and buy that option back. My original option for 60 cents, we're buying that back. Now, you understand the situation. I have to buy the option back or else the shares will be taken away. There's no ifs, ands, or buts. The market maker may take my shares away from me. It's a profitable trade. Bristol Myers is trading for 73.84. I got 60 cents. There is no doubt my shares are coming off the board. It's profitable. They're going to pick up the dividends, sell the shares immediately. Game over for me holding these shares. So I had to buy it back. So what I did was I bought it back for $1.30. Now, the reason I'm paying $1.30 is because there's still a lot of time on this trade, right? Remember that time decay really goes into effect that last week. Well, because we have weeks left, there's tons of time value here. So I have to pay back $1.30. And that's hard, right? That's hard because now I'm losing $350 on that trade. But I have to take action. If I sit on my hands, that's a true $350 loss, right? I got 60 cents. I buy back for 130. That's a loss. Now I take action. Notice what I did. I went ahead and wrote the 74 strike. So the stock's trading for 73X. I'm thinking after the X date, Bristol Myers is going to trade lower. So by picking the 74 strike, Bristol Myers at 73.84 is going to peel off lower. And now as people come out of the stock, it's going to start cooling down. So what I end up doing is picking the April 29th expiration date. I end up making $1.22 on the 74 strike, and I'm going to make $260 on this trade. Now, I end up making money on this trade. Why? Because I got the 60 cents on the upfront covered call, paid back 130. So my debit is not 130, it's 130 minus 60. Then on this trade, remember 74 is the new strike, but I get $1.22. And in this case, that becomes a profitable trade. Now, again, it's a buy and hold stock. I have no intentions of letting these shares go away. So that's a tiny, tiny little crumb, but I don't believe the shares will get to 74. And if it does, we have over 25 days to manage this trade. The reason I'm showing you this today is because a lot of stocks have been beaten down because of this recent sell-off. And you're buying these stocks and you're writing these great covered calls and the stock's moving higher. I mean, I'm in a bad situation with Square right now where when Square was trading at 103, I sold the 130 deep out of the money strike. It challenged that strike and even got to 140 before it peeled off. So what I'm trying to show you here is this. When you buy a stock or you have a buy and hold stock and you went out and did that covered call feeling they would never challenge that strike price, and here you are in a spot where your strike prices are challenged, you have to take action. Now, in some cases, you could just let them go, be profitable, have the money deposited into your account, and you just find another trade. But if you're out there slinging your buy and hold stocks that you've had for years, and if they are taken away at your strike price, you're going to have all that capital gains. Well, you're going to have to know how to buy back your options and roll them, okay? Because if you don't roll, well, that is a 100% loss on the buyback. Now, we talk about this all the time over the membership, or at least I do. My current Square trade is in a bad spot. Right now, it has me boxed in, literally. This thing has popped so much further than my strike price. The time value portion is like $9 over what I got paid. I'm going to have to add $9 to this trade. Now, do I buy it back and roll it forward? Well, I don't know if I do that. Square has literally moved from 103 to 140. If I buy this back and add $9 to my cost basis, then it falls. And it falls such that I added $9 to this trade. Now, do I want my shares taken away in Square? Well, I don't. This is a poor man's covered call, and I'm actually down on my leaps position. But we're going to manage this trade. But here's what I want to offer to you, right? If you're in these situations and you don't know what to do, I'm here. See, being a member gives you access to emailing me. And if anything, we'll look at this together, seeing the world through John's eyes. I'll give it to you straight talk style, and we'll cut through the BS. I'll tell you exactly where you're at and what I would do. Now, look, before I go, I want to give somebody a free membership. Last week, when I released last week's video, Doubling My Profits with Covered Call Writing, I went ahead and sent all of the CPT newsletter members an email. I'm going to pick those names from a hat. And my man Jeffrey right here is getting one free month. So Jeffrey, I'm going to go ahead and post that in the comment. I want you to email me and I'll make sure to get you that one free month. No obligation. I just want to share my talent. Hey, look, if you want to be in this month's membership draw, what I want you to do is in the description, you see the free CPT newsletter link. I want you to give me your email. I don't spam you. All I do is try to up your game. Hey, look, I have one free month waiting for you. Go to my website, cptdashboard.com. We're going to be talking more about the buyback. I have a couple others that are now challenging strike prices. I need to take action. And hey, look, if you like this video today, bang that like button. It truly does let me know you like what I'm doing. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.